Every month when I get paid, I add to my investments. In this video, I'll walk you through the accounts that I used, the investments I made, and why I chose them. If you like to stay updated in my investments and portfolio performance, make sure to hit subscribe. Now, let's get into it. The way I invest is long term. My plan is to stay invested for decades, where I feel like I've built enough wealth to partially or fully retire. And even then, I will likely keep a good chunk of my money in the stock market. Now, each month, I contribute to two types of tax-advantaged accounts that we have here in the UK. First is my self-invested personal pension, or SIP, which I have with Vanguard. This is my pension pot, and because I co-own a limited company, contributions come directly from my business. Unlike a workplace pension, I have full control over the fund choice. And whilst I benefit from contributions being made before tax, the trade-off is having to pay tax on 75% of the profits and having to wait until I'm at least 57 years old until I'm able to make any withdrawals. But realistically, that age limit will be higher by the time I approach retirement. That's why I also invest in a stocks and shares ISA on Trading 212. And stocks and shares ISA lets me invest without paying tax on any gains or dividends. And crucially, I can access the money whenever I want. So it's perfect for medium to long-term goals such as early retirement or aiming for financial independence. When I first started investing, I focused on individual stocks, which was exciting, but also overly risky and time-consuming. So over time, I've shifted more towards global index funds for stability while still keeping a portion of my investments in individual stocks that I believe in for the long term. Right now, my SIP is 100% invested in global index funds, and my ISA is about 60% funds and 40% stocks. This month, I invested a total of £2,500 across the two accounts. £1,000 went into my ISA with a mix of global funds and 3 individual stocks, and £1,500 went into the Vanguard SIP. So let's go through what I actually invested in. I'll start with my stocks and shares ISA, where I invested £1,000. My largest investment was £500 added to my global pie, which is like a mini DIY fund that I made for myself on Trading 212. 92.5% of the pie is invested in the Spider MSCI All Country World ETF, and 7.5% is the iShares MSCI World Small Cap ETF. By investing in this one pie, I get instant diversification across thousands of small, medium, and large companies across the globe. It also invests passively, meaning it basically tries to copy the returns of the world stock market rather than try to outperform it. Over time, I do plan to have more and more of my investments in this pie, which is the bedrock of my entire portfolio. It gives me more flexibility to not have to pick individual stocks if I don't want to at some point in the future. And that's why I'm more than happy to keep making it a substantial investment every single month. By the way, all the stocks and ETFs in my ISA can be found on Trading 212, who are kindly sponsoring this episode. Now, we have trusted Trading 212 with our stocks and shares ISAs for the past 5 years, basically ever since we started investing. That is because of the low fees and wide range of investments available, from individual stocks to ETFs, including Vanguard ETFs. There's something to suit every investing style. If you sign up to Trading 212 using code SNS bonus or through the link in the description of this episode and deposit at least the minimum amount required for Invest or Stocks ISA accounts, which at the time of recording is £1, you can get a free fractional share worth up to £100. Terms and conditions apply. Now, the first of 3 individual stocks that I invested in this month was adding £200 to my existing investment in Alphabet, the parent company of Google Search, YouTube, and Google Cloud. Now, Alphabet is easily one of the most important businesses in the world. Most people couldn't live without Google Search, spend time watching YouTube, and rely on Gmail or Maps or Android. That's billions of people globally who rely on Alphabet's products. But today, I want to talk specifically about AI, because for the past couple of years, it's been the story behind this business, and not necessarily in a positive way. When ChatGPT launched in late 2022, a lot of people worried that it would be the end for Google Search. And I'll admit, I had similar worries because I started using ChatGPT potentially even more than Google at the time. But fast forward to today, and I think the narrative has started to shift more in Alphabet's favor. For starters, Google has actually integrated AI into search through something called AI overviews. Basically, instead of just showing you a page of links, it gives you an AI-generated summary at the top. Over 2 billion people use this feature every month, and it's actually increased user engagement by 10%. More engagement means more ads, and that's reflected in Google search's revenue. That's been re-accelerating in the latest quarter, growing by over 11%. Plus, I'm now seeing this AI mode, which almost gives you the option to have a ChatGPT-like response to your search query if you want to. Beyond this, there's Google's core AI model Gemini, which is the company's direct competitor to ChatGPT. It already has 450 million monthly users, and the developer ecosystem around it is also growing quickly. Prediction markets also suggest Gemini could be the leading AI model by the end of next year. Now, the real edge Alphabet has is that it owns the full AI technology stack. Sure, it has to use some NVIDIA chips, but Google also builds its own chips called TPUs, runs them in its own data centers, and then distributes AI features across platforms like Search, YouTube, Maps, and Android devices. These are products that billions of people already use every day. That makes their AI cheaper to run, faster to scale, and instantly impactful. Meanwhile, the rest of Alphabet is doing pretty well too. Google Cloud revenue is growing over 30% a year. YouTube is the biggest streaming service in the US, with ad revenue up double digits, and Search also continues to grow revenue in double digits despite being a very mature business that apparently is being made redundant by ChatGPT. And the crazy part is, despite all this, Alphabet is the cheapest of the so-called Magnificent Seven tech stocks. It's trading at around 21 times forward earnings at the time of recording. For me, Alphabet ticks a lot of boxes. It has a dominant market position, it has multiple growth drivers, and you get all that in an attractive valuation. That's why I was happy to top up my existing investment with £200 when I got paid. Next, I put £200 into Games Workshop. This is a new position that I've been building out slowly over the last few months. Now, Games Workshop is one of the UK's best but little known success stories. They're the creators of Warhammer, a tabletop miniature game that's slowly growing into a global phenomenon. What's particularly attractive is how Games Workshop owns and controls pretty much everything. They design the games, manufacture the figurines, sell them in their own stores and online, and also license the Warhammer universe for video games, film, and even an Amazon Prime TV series. And this Prime series is a big deal. Henry Cavill, who's famously a Warhammer superfan, is set to star in this Warhammer TV series. That could bring that brand to a much wider audience and spark a whole new wave of fans. Plus, it should bring in a nice amount of high-margin licensing revenue for Games Workshop. But I think it's still a couple of years away from hitting our screens. Even so, Games Workshop has proven it can grow consistently by tapping into its incredibly loyal community, while also continuing to grow its niche. It's never a cheap stock, but it's a high-quality business with strong margins, global reach, and a product that's more like a hobby or lifestyle than simply a game. And that kind of stickiness is rare. So rather than rushing in with a big lump sum, I'm steadily adding to it every month, which is why I put another £200 in my Games Workshop investment in September. The third investment I made in my ISA was adding £100 to my existing position in Dutch payments processor Adyen. Adyen powers payments for some of the biggest companies in the world, like Shopify, Uber, and Microsoft. And also, as I recently learned, Space and K. What makes it special is that Adyen built its payments platform from scratch, and everything works together smoothly. This is almost shockingly rare in enterprise payment systems, but it gives Adyen a huge competitive advantage in the industry. It's a huge advantage for these giant global businesses because it improves conversion rates, it reduces fraud, and saves costs. Adyen's growth has slowed a little recently. Revenue was up about 20% in its most recent quarter, slightly below expectations, and this was mainly due to its online Asia-Pacific customers who sell into the US facing severe tariff headwinds. But even so, management still expects revenue growth to exceed 20% both this year and the next, and hopefully beyond, right? It remains a newer position for me, but who doesn't like a disruptive, founder-led business with a superior product taking market share in a huge industry? But yeah, that is why I was happy to add another £100 to this investment. Finally, onto my Vanguard SIP, where I invested £1,500 this month. Within my SIP, I keep it super simple. Everything goes into just one fund, the Vanguard FTSE Global All Cap Index Fund. This fund invests in thousands of small, medium, and large companies companies worldwide. Unlike the ETFs in my ISA, this is a mutual fund, which is why it isn't available on Trading 212. And actually, that's why I replicate a similar exposure in my ISA with my Global Pi. But here, I can just buy the all cap fund directly. The key advantage of this fund is that it includes small caps automatically, which gives me even broader diversification. It's not particularly exciting, but that's the point. Pensions are long-term by nature. I can't touch this money for decades. So I want it sitting in a low-cost, globally diversified fund that mirrors the performance of the world economy. So to recap, here's how I invested this month. £1,500 went into the Vanguard FTSE Global All Cap Index Fund within my pension. And within my stocks and shares ISA, I put £500 in my Global Pi, £200 in Alphabet, £200 in Games Workshop, and £100 in Adyen. If you're curious, Jamie, my husband, and the other half of this channel will be posting his monthly investments next Wednesday. So be sure to check that out. And if you'd like to follow along with our investing journeys, don't forget to subscribe. Thanks for watching, and I'll see you next time.